What are your thoughts, Justine, on using candlesticks on a weekly basis? Do you still like to look at candlesticks weekly, or?
With my weekly system, I'm purely looking at the weekly charts. With the
Yeah.
daily, I tend to look at the daily charts and hone in on the candlesticks on those charts. But I find by looking at the weekly chart, you get rid of all the noise. So, because one candlestick on a weekly chart's 5 candles on a daily, so you don't have as much noise and you can see the trends a lot better. So by having a 30-week moving average on the chart and looking at it on a weekly point, you can see what market stage it's in, and it gets rid of all that noise and you can just see the trends a lot clearer.
Cool.
Okay, so next chart's AMP. This share suffered terribly during the global financial crisis and has had a lot of trouble getting up anywhere near new highs, but you can see how it's developed that triangular pattern. All the stocks just seem to have formed some sort of consolidation pattern for the most part of this year, pretty much for nearly 6 months. And then they've collapsed. So this is another example of one that has collapsed. And you can see that there in the chart. The next chart's Telstra, which is one of our top telco companies. It also, a bit like AMP, never recovered after the global financial crisis and formed that triangular pattern and has broken underneath it as well, and clearly making new lows. Then we've got Wesfarmers, which is another big company in Australia that owns many different things and retail outlets and so on, and it's come up and recovered nicely from the global financial crisis, and it looks a bit like Commonwealth Bank, where it's now churning sideways, making with a nice support level around the $27 mark, and so far hasn't collapsed. So
just below that moving average too. It's just under that moving average, so be interested to watch for sure.
Because usually what you see after a stage 2 uptrend's been in place, they'll go into a stage 3 top. The strong stocks may stay in that stage 3 top for some time, and if the market gets strong again, they'll break back out into a stage 2 uptrend. But if the weight on the market is too much, it could drag them lower and they could break down into the stage 4 downtrends. But as to how long anything's going to go on for, that we don't know. So we can never control the market. Okay, so let's have a talk about bear markets, because from looking at these charts and the index charts, excuse me, we can see that a lot of things have broken down and are looking unhealthy, and it looks like the signs that we are starting a bear market. And this is the kind of market where traders fail. I mean, anybody can trade a bull market, and it's those that have a trading plan and a strategy that will survive in the bear market, especially if they know how to short sell. They can turn things around and profit from it. But it's also having an exit strategy and knowing when to get out. There's nothing worse than hanging on to a stock in hope. So it's basically when the market trend changes that it's the successful traders that are still trading, and they're the ones that have that strict trading plan and money management rules that they're adhering to. So how have you been handling the market? I mean, have you had stop losses in place and you exited your long trades when the market turned currently? Have you profited from falling shares through short selling, or are you one of those that's hanging on to trades in the hope that they will come back? Because, hey, they did come back after the global financial crisis, but not every share came back. I showed you some like Commonwealth Bank and BHP that have come back up near their highs, but AMP didn't and Telstra didn't, so not everything will necessarily come back. And that's why stops are so important. And I don't believe in hanging on in hope. So you need to take responsibility, and that's because you are the most important part of your trading. You're the one that makes the decisions. You're the one that's got to act. And when you open a trade in the market, it's either going to be profitable or unprofitable, and not every trade's going to make you money. You have to take losses. That's a part of trading. But it's the ones that can control those losses and keep those losses small that will be successful in the market. And as I mentioned last presentation, my whole goal is to keep my winners much bigger than my losses. And by doing that, I use money management strategies, and that's what stop losses are all about. So I want to talk about handling losses, because during this sort of period, this is where you can hit that cluster of losses, and it can be very frustrating, and especially if you're just starting out, you can get very depressed. So, you know, you need to ask yourself and answer this in your trading plan. What will you do if you hit that cluster of losses? At what point will you stop trading? Will you take some time out and reevaluate your trading and review your psychology? Will you tone back your exposure in the market? And when I talk about tone back your exposure, that's, for example, cutting your risk percentage in half, cutting your portfolio heat level in half, and easing back into the market. So you need to have this information included in your trading plan so that you know how you're going to act when these things occur. And that's what your trading plan is all about, thinking about all the things that can happen with your trading and having a plan for it. So if you're at the stage where you don't know what to do, maybe it's about taking time out and reassessing things, because when you hit that cluster of losses, you can continue to sabotage yourself by digging yourself into a deeper hole, because you think, look, the market owes me, I'm going to win big next time, so you start pumping extra money in the market. That's not what you want to be doing. That's a martingale strategy where you're doubling your bet size when you're on a losing streak. You only want to double your bet size when you're on a winning streak. So you want to follow anti-martingale strategies and tone things back. So you really need to evaluate yourself as a trader and understand what's caused these losses. Is it just the market, or was I trading emotionally? And if need be, make some changes to your strategy and update your trading plan. And as a trader, you've got to learn from your mistakes, and you've got to know when it's time to stop and reassess, and decide when you're ready to re-enter the market, and do it slowly. As I mentioned, halve your risk size, and once you're confident again, then you can increase it. But the truth is, the majority of professional traders usually only have a 50% reliability. I myself, looking back over my last 5 years of statistics, on average have 50% wins to 50% losses. So I know that every trade I open has a 50-50 chance of being profitable or not. And unfortunately, I don't know which ones are going to be profitable, so I've got to open up trades, cut the ones that don't go my way, and then I'm going to stick with the ones that are going my way. And the whole secret is, as I've already mentioned, keeping those wins much larger than those losses. Because in the end, it's only going to be a few trades that make you big money, and there's some outstanding stocks that I know, they were the ones that made me the money in the market, and if I can break even or make a small profit on the others, then I know I'm going to be profitable. I mean, it would be easy if we knew which ones were going to be profitable before we got into them, but we just don't. So you really need to, your whole goal is to protect your capital with your trading and avoid any risks that could put you basically out of the business of trading.